Hey everyone, Dan here. Today we're going to talk about Dogecoin and how to analyze the chart and use it for entry and exit positioning. As always, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's get right into it. So I haven't talked about any cryptos previously on this channel. We're usually pretty focused on stocks, but the reality is, as a trader, it's advantageous to just explore all opportunities available for trading. And so Dogecoin has obviously been a big opportunity as of late. I did play it way back, but it wasn't anything terribly methodical. But since the big surge last week, I've actually been taking into account the charts and wanted to share some of what I had learned, and hopefully it may give you some additional ideas or information that you can use when trading Dogecoin. So, it's going to be live here because it's just always live, and I'm on the 1 minute chart. And a couple of things to note. So, and we can run down through these and I'll show you a bit of what I mean. So, but just to give you the laundry list, my primary indicator so far has been the RSI, and I'll show you how I've been playing it. Second indicator is basically like supply and demand zones are holding up pretty well with Doge. And then the EMA, the exponential moving average, the 5 time frame has been working pretty well. The MACD has been a good sort of like secondary or third indicator to combine with some of the others, but to me it hasn't been my primary. I don't think that it provides enough consistency in order to have that be my primary indicator. So I would say that's been basically my like tick down list: RSI, primary indicator, and then supply and demand, and then the EMA, and then sort of like a final check on the MACD if I even want. It does also, this sort of goes with the supply and demand stuff, but it also does form channels quite a bit. That said, the channels they blow up quite quickly. So blow up meaning like they get busted. It busts out of the channel. But I think, so what I was doing is before I would put a channel just for like this price action, and those tend to bust really quickly. But what I think you want to do is develop a bit of a longer standing channel when you see it happening, whether it's up or down, and watch it so that you can buy on the dip at the bottom of the channel if it holds, and then sell toward the top of the channel and make your profits that way. So consistent in and outs through channels. So this channel has held since about, a little after 11 a.m. this morning. And it's to give you, it's a little after 2 o'clock. So it's been holding it for a couple hours. And so this could be a good opportunity to play. But again, just remember the channel is definitely going to bust. So just keep that in mind. What I would mostly look for, let me just get rid of the channel so that it doesn't like clog up our view here. If we look at the RSI down here, what's been my most consistent play has basically been to buy in when the RSI is under 30. So right here it was at 29. Okay, so that to me would have signaled a buy. So we would have bought in there at about 30.31, something like that. 0.3031, and then I'm selling out as it gets close to or over 70. So on this one, there's a good chance I would have sold out here because the RSI got to 65, and this was 31.49. So, like these seem like small numbers, but it's big percentage changes. Even if it's just a few percent, you can get in and out so many times because PDT doesn't apply to the cryptos. And they're going 24/7, and so small percentage gains just over and over and over and over and over again throughout the day or the night can really add up. So that's what I've been doing: buy in when the RSI is under 30, and then sell out as it approaches or gets over 70. So typically, as it's approaching 70, I'll just kind of like look at it to see what's happening. So here's another instance. I can sort of try to highlight these. So here it was under 30. And so we would have taken an entry here, and then we would have exited about here. Let's just say there. And so then you would have gone from about 28.5 cents up to about 30.5 cents. So again, these are good percentages. They're good, quick ins and outs. It's really simple. Just buy in when it's oversold, sell out when it's overbought or gets close to overbought. And that's been my main strategy. Aside from that, the supply and demand zones have been holding up pretty well. So like if I were looking at this, I would look like here because you have support, you have previous resistance that built to support. I don't know how far back it goes. Previous resistance there, previous support there. Yeah, so this is a really good level to be looking at. And these last quite a bit of time actually until it like sort of starts trading into a different price range or price category. So for instance, I had a whole slew the other day of ranges in the 20-cent range. And then when it developed pretty consistent support over 30, then I had to like, just get rid of all those because it wasn't dipping down that low anymore and sort of redevelop them for whatever's in the 30s. But these have been really good for me to sort of see, okay, like where's the RSI and is it hitting a supply or demand zone? So that's like a good secondary catch. So if you want to say, okay, so it's nearing 30 and it's also hitting a support zone. So maybe I want to wait for it to hit the support zone because I think it'll dip down there. Maybe I want to buy in now and then sort of like cut losses if it dips below the support zone. And then same thing with the resistance. If it's coming up to a resistance point and maybe it's at 60 or 65 on the RSI, so it's not quite to your 70 yet, but you sort of think, okay, well, it's pretty high in the RSI. It's coming to a previous resistance zone. I'm going to take my profit here because it's probably going to hit that resistance and bounce down a bit. So that's sort of been my main strategy. So these are like the zones that I'd chart for now. There's obviously a little bit of one here too, sort of our most prevalent at the moment support zone at 3149. So those have been two really good like combos to use. RSI combined with supply and demand zone. And again, if it's coming down toward 30, I haven't even been paying attention too much if it's coming to a support zone because it's been so reliable to just buy under 30. And then even if it does dip more, there was a time, I think either last night or yesterday morning where it had quite a big sell-off. Oh, it was yesterday morning. And it sold off and the RSI got all the way down to like 15, 17, something like that. But, it basically proved out that had you bought in under 30 and then continued to average down as the RSI dipped, and then waited to sell out until it was overbought, you still would have come out on top. So it's just been so reliable that I've been basically thinking, well, why make it more complex? So on the buys, I've just been looking at the RSI. On the sells, that's where I'll sort of like take these zones more into account and try to figure out, is it coming to resistance as it's approaching 70? And if so, I might jet out. If it has a little room before it's going to hit resistance, then I might give it some wiggle room and see if it'll bounce over 70 before taking profit. On the EMA here, you see a lot of times it'll establish over the EMA and then it'll have a nice run up. But there's plenty of like false triggers as well. So there's like all of these that like had you bought in and then held through the dipping, it would have been fine. But it's a good like third level check if you want. But I think that will just come into play if one of the other indicators like the RSI or the supply and demand start to go full bust for some reason and just aren't holding up anymore, then maybe the EMA will become more of a factor. But at this point, for for the experience that I've been having, it's somewhat helpful, but pretty much unnecessary at this point. Again, like if you don't need to overcomplicate the trading, like don't overcomplicate the trading. If RSI is good for pulling triggers to buy in and good for pulling the trigger to take profit, like why make it more complex than that, you know? And the MACD, you know, you can see a lot of times when there's a crossover that's happening, that's been a pretty good indication. You know, you get a good run up, you have all these crossovers here. You know, there's not actually a ton of like this type of action where it's just weaving over, under. It's been pretty solid. And I guess the other thing that has been decent for the MACD was if you're trying to figure out, you know, it's just sort of like bouncing itself around in this zone for now, like it's not doing anything that significant. Seeing if the bearish momentum is picking up or if it's waning, which right now it's waning, but so is the bullish. But the bullish momentum has a bit more on its side than the bearish momentum. So that's been a little bit helpful to just sort of like get some context of, okay, where are we in the like trading momentum. So like if you just pop into your chart and you're having a look at it, obviously because this runs 24/7, like there's a lot of things that are happening that you would sort of like need to get caught up on. You know, are we generally looking bullish here? Are we generally looking bearish here? And that's where I feel like the MACD is the most helpful to come in and just sort of like get your context. Okay, like here's where it was like more bearish, and then it died down, and then it tried to come back, and now it's really dying down on the bear side, and the bulls are trying to pick up, and then you know, there's some more bullish sentiment here. So you know, that's where it's been most helpful for me. Get the context from the MACD, and then once you're in it and watching it, just focus on the RSI, focus on the supply and demand if you need, and just sort of like stick with those. As you see right now, we're getting a nice push up, but it's getting close to that 70. So here's where the question is going to be like, you know, you're close to your next resistance zone. You're very close to 70. If it were me, I'd probably pop out and then I'd wait for it to come back down below 30. So that's what I was talking about before, mixing the RSI with the resistance zones that are charted. Okay, well, I hope that this was helpful. I sure am having a lot of fun with this Doge situation. So for however long it lasts, I'm happy to be playing it. It's also pretty crazy that it's just 24/7. So, and that there's no PDT. So that sort of like amps up the level of well, this is fun kind of mentality. But in any case, you know, I hope that this was an enjoyable video. I hope this gave you some ideas, and I wish you all the best of luck. Obviously, be careful for a potential rug pull because it's gone up a lot, but you know, maybe that won't happen. Maybe this is just the new floor. No way to know because that is crystal ball territory. But okay. Well, in any case, I appreciate you watching. Feel free to share these videos on Reddit, Twitter, Facebook, you know, wherever you share things. And I will see you all in the next video.